The real question is, are we still going to see this massive, gigantic bull run that people have been talking about for years? Today, we're going to go over some important things and take a close look at the facts we currently have. We'll look at where we stand, what the differences are, and what has changed for the better things that people in the background tend to forget. We'll take a look at that in just a moment. But before we get started, as always, please leave a like and a comment, because this video also took a lot of work, and I would really appreciate it if you showed your appreciation for that effort. So let's start with the basics. Is this going to be the massive bull run we've been talking about for years? First, we need to ask ourselves, where do we currently stand? At the moment, based on time and data, we're at the point where, according to the numbers, we should still have 4 or 5 months ahead of us, but it doesn't really feel like we're in the euphoric phase yet. But in terms of timing, we're definitely still within the window. The other question, of course, is, are we starting to run out of steam? To answer that, we need to look at the following charts. We need to take a look at where we currently stand in the crypto market. Where do we stand with the social metrics? And that's really damn interesting. Take a look at $100,000, the first time per Bitcoin we were here. Back then, we had a bit of retail interest. A few new people definitely entered the market at that point. Now we're back above $100,000. We've even hit a new all-time high, and we're here. Right now, no one is interested in this market. No one cares, even though we're hitting new all-time highs. Probably also because the altcoins haven't really done much yet. Even if we look at the funding rate, we can clearly see, sure, there's trading going on right now, but look at this. Relatively speaking, there's nothing going on here, right? There's no retail involvement here, and we're nowhere near overheated yet, especially when it comes to leverage. And that's really interesting when you look at it, because that's obviously intentional. Absolutely. This is exactly the principle at play here. People got hyped up in this area. They over-leveraged themselves. There was a real phase of euphoria. New people joined in, and everyone started setting new targets. The bullion and so on are really nice. Altcoins are here, altcoins are there. Everything is going to explode. But then, after months of stagnation, people started to get scared and quickly sold at a loss. And at some point, the mood shifted so much that we needed the next upward trend. And we've already seen this happen several times in this cycle. We're not rising here in a straight line like we did in the past. We're climbing here step by step, like stairs, higher and higher each time. It's happening in these stair-like steps now because Wall Street is simply in the market. Today, there are more people, more trading, and so on in the market. Just take a look at the open interest. The open interest here is 3 times higher than in the last cycle. There's an extreme amount of trading going on here. A lot of money is being shifted back and forth here. We can also see that on the heat map. Just look at how damn much money is sitting here. Sometimes Bitcoin has to rise by $4,000 and then another $2 billion get liquidated. That's the situation these days. We didn't have these kinds of conditions in the past. There's just so much capital here that the market makers want to drag the game out as long as possible. That's why these days we're also climbing in this stair-step pattern instead of all at once, simply to extract as much money as possible. Of course, this whole thing also has its advantages. The longer the cycle is drawn out, the higher Bitcoin would have to rise. That's just a fact. We have indicators that support this, but history also proves it to us. The longer it's drawn out, the higher Bitcoin has to go. I mean, here with the P-cycle top indicator, in order to reach the overheated zone, we would have to climb to $155,000 per Bitcoin. And you know yourselves what a huge leap that would be. And the longer this whole thing stretches out, the higher we have to go. We see the same thing with the rainbow chart. The longer the cycle stretches, the higher we have to rise. And we can clearly see that we've already been close to this overheated zone twice, but each time we were pushed back down so that we wouldn't overheat too quickly or too extremely. Because once this ball really gets rolling and we truly experience that FOMO, it becomes unbearable. The market makers, the whales, have deliberately steered the game so that we don't overheat here, so that we first have some good jumps without overheating, but that the process is drawn out as long as possible. They have intentionally kept us small so far because they know exactly how much capital is currently in the markets, and they want to prolong this cycle for as long as possible. And I would actually be starting to worry if I didn't see that we have such incredibly large whales who are still aggressively buying up Bitcoin. They're buying Bitcoin because even at these price targets, they are absolutely optimistic and enthusiastic that Bitcoin will continue to rise. If whales didn't do that, then maybe I would think a little differently here. But the people, the smart money, who are really managing a lot of capital, are still very willing to buy Bitcoin right now, because even at these price levels, they still believe that Bitcoin is undervalued. We see that last week alone, over $305 million flowed into Ethereum. That's 0.1% of the entire Ethereum supply that was bought up just last week. And as you can see for yourselves, to increase the price by 2% here, we only need about $21 million. That's really not that much money. And you can clearly see from these numbers, data, and facts just how great the demand has become. And you can also see it with Ethereum. The Ethereum price is holding up much better than the Bitcoin price. Everyone thought, hey, Ethereum is going to fail, Ethereum can't keep up anymore, Ethereum won't rise properly at all. Then we had 3 good weeks with Ethereum, and suddenly the whole picture looks completely different. People are once again very euphoric, very optimistic, and you can also slowly see a bit of FOMO among institutional investors when it comes to Ethereum. They're currently buying more eagerly than ever. And you all know exactly how a market like this works. First, money flows into Bitcoin, then into Ethereum, and then into the altcoins. And in this regard as well, we're slowly starting to see the preparations for this process taking place. The other question, of course, is when will we see performance from the altcoins? For that, we need an expansion of the money supply, which we're already seeing with the M2 money supply and a favorable interest rate policy. This year, the interest rate policy will be improved in the US later this year, but that hasn't happened yet. In addition, the Fed's balance sheet is still showing monetary tightening, but that will also come to an end this year. That means these 2 macro factors are currently improving and are actually moving in the direction we want, so that the altcoin season will also be more favorable, and we need an overheated Bitcoin. At the moment, Bitcoin is far from overheated. I mean, I already showed you, there's hardly any interest and the funding rate is lower than ever before. We're still nowhere near overheated here. The upside potential for Bitcoin just keeps getting bigger because this cycle is simply dragging out a bit. I mean, you can see for yourselves, last time we were at 100,000 with Bitcoin, there was an excessive amount of trading in the market. Right now we have new all-time highs and hardly any trading, and we're still far from being over-leveraged. That's the big difference. And that's the advantage of this delay. The market keeps getting stretched out further and further, and the longer it gets delayed, the higher our price targets become. There are also a lot of catalysts this year that are driving certain things. For example, there's the political aspect. Politics are becoming more and more crypto-friendly, more so than ever before. We have the most important country in the entire world on our side. The most important country that is pushing and supporting the crypto market. That's huge, especially since Donald Trump has announced that the government itself might buy Bitcoin. So far, we haven't actually seen any of that happen. But if that does happen, we could see some really extreme price targets here, because then truly billions could flow into the market. And the crazy thing is, if other countries follow suit, then things will get really interesting and really huge. Because, as I said, then billions could flow in and we could reach price targets here that are unimaginable. There will definitely be more altcoin ETFs coming. This will especially benefit the altcoin sector, of course. If we see Solana ETFs, XRP ETFs, and so on here, that will further boost the altcoin narrative, and I think it could trigger a general FOMO, especially among altcoins. We're seeing more and more MicroStrategy-like systems. MicroStrategy is a company that simply operates by taking out loans and using those loans to buy Bitcoin. And they're doing this on a very large scale, and I can already see more and more companies starting to do the same. This could really inject an extremely large amount of multi-billion dollars into the market, which is ultra bullish. The money supply is increasing. That's also really nice to see. The M2 money supply has increased by nearly 4% since January compared to the previous year. And that's the largest increase in the M2 money supply in the last 30 months. We're really seeing a huge amount of liquidity here, which we're now gradually feeling in the markets as well. This liquidity is really substantial, and of course that benefits us. But this also has a harsh aftertaste, because the liquidity is coming since the system will eventually collapse in on itself. For example, the USA alone has to refinance $9 trillion this year. That's 9 billion in German terms. That's simply government debt. This is the largest repayment that has ever happened. $9 trillion. Just imagine how incredibly much money that is. They have to pay back this money this year. The only way to do that is by lowering government bond interest rates and taking out huge loans in the end. That's also an expansion of the money supply. That benefits us, even though it's actually sad what's happening in the background. But these are things that work in our favor. And yes, there are some very positive things here, which I just mentioned to you. The biggest danger I still see at the moment, however, is clearly Japan, because by now the whole world has a debt problem. But Japan has a major problem because interest rates there have risen massively and they are extremely heavily in debt. Their debt is 3 times higher than their GDP. That is extremely dangerous, especially because Japan also holds a lot of US government bonds. That means a collapse in Japan would also trigger a collapse or a crash in the US. The crazy thing about Japan is that their debt is 3 times higher than their annual income, and this debt is growing twice as fast as your income. Japan has now reached a point where you have to clearly say that this house of cards will collapse in on itself. We just don't know when, but when it happens, it's going to be explosive. And it's not without reason that we're already seeing these high government bond yields in Japan. All the agencies, the hedge fund managers, they currently see a huge risk in Japan. They can already see that there's an avalanche building up, and when it starts to come down, things are going to get really ugly here. That hasn't happened yet, but it's one of the biggest risks I see this year. Because, as you know, the political climate is pro-crypto. There are altcoin ETFs, more and more large institutional investors, and more systems that are simply built on credit, bringing us a lot of liquidity, and the money supply is expanding. All of this ultimately leads to FOMO. And if we really experience true FOMO here, I promise you, you won't recognize the market if you haven't been through something like that before. That final phase of euphoria is crazy. That's when altcoins and cryptos can really skyrocket. You don't want to miss that. This is really the most interesting phase. But of course, this phase also carries risks, like not selling and so on. Basically, we have a great foundation. Globally, as always, there are a few risks, but that's always the case. I don't think the situation with Japan will collapse this year, but I could imagine it happening in the next few years. But what do I know? Maybe I'm wrong about that too. But as I said, in my opinion, that's the biggest danger, the risk of some kind of war. Otherwise, we've built a foundation recently that gets better every day. We have a great foundation for a gigantic bull run. And at this point, I want to sincerely thank you for watching. As always, leave a like and a comment, and see you next time. Bye.